Heya, cryptozens. Tonight's show. Meta goes brick and mortar. Intuit sued over Trezor Phishing attack. Fidelity's Bitcoin 401k option. It's 10 p.m. Pacific time. The date is April 26th, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. We're here to bring you the cryptos analysis you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. So, Meta is opening a store. And it's not surprising. Mark Zuckerberg revealed that Facebook's parent company would be opening their first brick and mortar Meta store. In case you're in the area or you just feel like a Facebook-inspired road trip, the store will be opening on May 9th at the company's Burlingame campus. They're opening a 1,550 square foot retail space dedicated to virtual reality headsets and other gadgets. And yes, I understand the jokes. A brick and mortar Meta store. But it does make sense. It's one of those places where they can do things like show off their Quest VR headsets through demos. People there can also go hands-on with the Facebook portal, which I'm not really sold on. Those smart glasses they partnered up with Ray-Ban on. They can try them out. They can either pick them up while they're at the store or they can order them for delivery later. Zuckerberg said, quote, Meta's first store is opening in Burlingame, California on May 9th. You can experience Quest 2 and project what you're experiencing on a big wall for your friends. It's a great way to see how our products connect people today and get a sense for what's coming as we build towards the metaverse. Now, they dropped $10 billion on the Reality Labs division. And on top of that, they're expecting their flagship metaverse product will take at least 10 years or more to see fruition. Martin Gilliard is the head of Metastore, and he said, quote, the Metastore is going to help people make that connection to how our products can be the gateway to the metaverse in the future. We're not selling the metaverse in our store, but hopefully people will come in and walk out knowing a little bit more how our products will help them connect to it. Now, one of the things that's becoming a trend is what Meta's doing. Now, they're planning on opening up a virtual items store, because why not? Everybody else is. And I did a segment on Horizon Worlds a while back. They've built tools for creators to use in their version of the metaverse. So they're making tools for people to build things like NFTs. On the other hand, they're going to have to get realistic about how much of a cut they should take from the profits. Right now, I'm hearing that they're expecting 47.5% of the sales would go to Meta. And an additional 17.5% goes to Horizon Labs. Now, I get that they've got their operations experiences, but still, if I'm an artist and then a platform wants to take $65 out of every $100 I earn on my sales, I'm not going with that platform. I don't care how cool it is. Now, let's take a quick look at the markets. Because, man, we took a beating today, didn't we? I did anyway. I don't know about you. I think pretty much everything on the board dropped dramatically. So, what are the numbers? At the time of writing, the global crypto market cap is 1.67 trillion. For reference, yesterday it was 1.88 trillion. The top 5 cryptos by market cap are Bitcoin down 5.83%, Ethereum down 6.54%, Tether, Binance Coin down 4.67%, and USDC. So, what about the NFTs? How are they doing? The global NFT market cap is up over 10.41 billion. Sales volume is up 31.95% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Win NFT Horse, followed by Moonbirds, Mutant Apes, Bored Ape Kennel Club, and Bored Apes. And keep in mind, some of these collections have very volatile prices, so do your own research. Intuit sued over a Trezor Phishing attack. Intentionally willfully, recklessly, or negligently. That is how a new class action lawsuit describes Intuit's actions, or maybe more accurately, a lack of action. Either way, they're suing Intuit over how MailChimp's data was protected, or wasn't protected. They're alleging that this is what led to the theft of crypto from people's Trezor wallets. So, this lawsuit was filed in California on Friday. It was filed against the Intuit and Rocket Science Group. Now, Rocket Science Group is the one they run MailChimp. So, this suit holds them responsible for, quote, millions of dollars of losses. Alan Levinson is one of the victims of this hack. They stole $82,000 from his Trezor wallet. And so he's taking this step on behalf of himself and other wallet users. He's seeking actual and punitive damages from Intuit, also asking for 3 years of credit monitoring. Now, I'm not really sure how credit monitoring figures in on this case, but whatever. His allegations really are more focused on the Rocket Science Group. He said it was one of their employees that, quote, fell victim to one of the oldest cyber tricks in the book. So, what did this hapless employee do? They did the thing that cybersecurity professionals warn against. They clicked an email link. Unfortunately, this link was malicious. It granted attackers access to a bunch of personal information. This included the email addresses of over 100 users, people who were subscribed to Trezor's newsletter. So you see how that works out, right? Now they have this list of known users of an employee or company's services and their email address. If you spoof the email address to look like it came from Trezor, then people are more likely going to trust that your email is legit. So they sent emails out to these users, and it took them to a fake website that asked them to download a new version of their desktop app. You see how well put together this little plan is? So they get the victims to download a fake version of the Trezor suite. They're told the reason for the new version is to protect people from a data breach. The British would call that cheeky. So then the predictable, obvious thing happened. This fake version of Trezor hands over the user's recovery phrase to the criminals. Now, for their part, Trezor has warned their users about this scam. On Twitter, the company said, quote, a scam email warning of a data breach is circulating. Do not open any email originating from noreply@trezor.us. It's a phishing domain. And that makes sense. Who uses Trezor.us? Nobody. Their web address is trezor.io. That's what their email should come from. Now, their website still has a warning not to enter their recovery seed phrase just anywhere. And while it didn't mention Trezor directly, MailChimp did reference the event in a blog post. They said, quote, based on our investigation to date, we found that 319 MailChimp accounts were viewed and audience data was exported from 102 of those accounts. Our findings show that this was a targeted incident focused on users in industries related to cryptocurrency and finance. It's kind of funny. Here we are, on the cusp of Web3 breaking out, and we still have folks falling victim to the same old tricks. This is the kind of thing that they did in the 90s, impersonating AOL employees and sending out sketchy emails. And it's still happening. You've got MetaMask, Bored Apes, Circle. Recently, they've all had to issue warnings against phishing attacks. When is it going to stop? Fidelity's Bitcoin 401k option. So, Fidelity is going to let you start allocating up to 20% of your 401k to Bitcoin without needing a crypto exchange account to do it. And I say up to, because really it's up to the employer how much, if any. So, here's where we are. Fidelity Investments will reportedly let you invest in Bitcoin through your 401k retirement plan. Now, it's not available quite yet. It's supposed to go live later on this year. And when it does, it's going to open the door for over 23,000 companies. And these are companies that have contracted with Fidelity to administer their retirement accounts. That is, if this gets approved by employers. That 20% allocation is not set by the employee, but by the employer. And right now, it's only Bitcoin. But Fidelity is apparently in discussions with a number of their employers. MicroStrategy, of course, is already on board with these Bitcoin investment retirement packages. While it's not exactly common, letting people use Bitcoin to bolster their retirement accounts isn't new either. In June of last year, there was a retirement plan called For Us All. Now, they got together with Coinbase to offer their version of the same thing. They too offer Bitcoin exposure to their retirement savings account holders. But that's for us all. That's not an outfit like Fidelity. Fidelity has over $4 trillion of assets under management. Their actions could kick this up into the mainstream. Dave Gray is the head of workplace retirement offerings and platforms at Fidelity. Now, according to him, this Bitcoin exposure to 401k plan holders came from the clients. He said, quote, "We started to hear a growing interest from plan sponsors organically as to how could Bitcoin or how could digital assets be offered in a retirement plan. We fully expect that cryptocurrency is going to shape the way future generations think about investing for the near term and long term." And like I said earlier, this is a Bitcoin only thing. But according to Gray, that could change if there's enough client demand. So, while the clients are in favor, it would seem that the Department of Labor is not completely on board. They are the government agency that's in charge of watching employers' retirement plans. They issued their own warning. I guess it can get kind of tricky here, right? Because the employers are the plan sponsors, which means that they're the ones that are going to be held to the fiduciary standard. Not the employee, not Fidelity. So that means that they are expected to act in their employees' best interests when deciding what investments to include with their 401k. And they have to make their evaluation on things like core investment earnings, expense ratios and fees, and what does unreasonably risky mean? These can be complicated questions for employers. They could be for any kind of employer. They could be a tech-focused or a tech-adjacent employer, sure. But it could also be a guy who owns a regional chain of fast food restaurants. He might well have no idea what Bitcoin really is, let alone have an understanding of how much of his employees' retirements should be wrapped up in crypto. And that's going to do it for us tonight. Thank you so much for joining us. I really appreciate it. If you enjoyed tonight's show, like, comment, subscribe. Give us a review. Do you have questions or comments? Reach out and let us know. The address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. And check out my other podcast, Crypto in 5 Minutes. We have 41 educational podcasts, 5 minutes to explain one concept in crypto. And as always, may peace reign.